Hello, everyone, and welcome back to this J22 report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And I just want to do a quick weekend video on today's news and market action. Let's get into it. First of all, gold, as you can see, down 1590, silver down, platinum, which I actually like. I think it's generally trades at a ratio 1.5 times the price of gold, so it's undervalued, but I don't think it's going to sky up that much. If you look at let me see, did I share my screen? Not yet, but yeah, if you look at the markets, the Dow had a big day, gold had a big not gold, gold had a big day the other way, but uh S&P, all that, very strong day. Let me for some reason, Yahoo Finance, very weird dynamic. Let me share my screen real quick. And if you look at it here, S&P up a lot, Dow's up a lot, but the Nasdaq was actually negative. Very weird. I really have nothing to say about that. Obviously, it's an election year. They're gonna go. They're gonna go do everything they can to prop this up. So, no real big news, anything. So, but going forward, I was gonna say I'm gonna stop my screen my share. Let's get into the economic data. If you look at it, CPE if you look at price index, came in less than expected. That means the Fed could cut rates, and I think low inflation also is one of the reasons gold sold off. And but the thing is, here's the silver lining. If you look at the Chicago PMI right here, 35.4. This is a massive contraction. And if you don't know what this is the Chicago Business Barometer. And this just basically in the economic activity, it's very big, really huge uh, drop, sharply missed, and it was the sharpest contraction since the pandemic induced economies. Sharpest contraction, that's what it was. So, and look at this large response to tighter policy by the Federal Reserve. So, this is not a good. And if you look at Thursday's GDP numbers, that was horrendous. And so that is the biggest. And this is bullish for gold in the long term. If we keep getting economic readings like this, it will go from inflation to recession. And then the Fed will start easing drastically. And if you look at post 2008 bull market from 2008 to 2011, post tech bubble crash, those are the most bullish environments for gold. And Fed, as I said in my earlier video, the Fed's higher for longer. So as long as the Fed's higher for longer, we're going to start seeing worse and worse economic data. So that's all I have with that. Uh, the other thing I wanted to go into right now, Nvidia has been leading the stock market. And if you look at it, big tech companies, Amazon, Meta, Microsoft, Alphabet, the reason why a lot of stock earnings are doing poorly, but Nvidia is doing well, it's because a lot of these businesses already allocated spending this year towards their customers, meaning software designers and whatnot, and they're locked in for 6 months or 12 months. And that's why you see the disconnect between Nvidia and stuff like Starbucks or McDonald's. Nvidia is a lagging indicator. It's not a leading indicator of the economy. It's a lagging. I'll be the first to tell you this. It is a lagging. This was money was already allocated during the winter and fall of last year when everyone was pricing in Goldilocks, not just Wall Street, but big businesses like Amazon, Meta, Microsoft, Alphabet. They were all pricing in Goldilocks, and right here. And that's why Nvidia is a lagging indicator. That's what people forget about. The other thing, as I've been saying, the next couple months, I'm not really that bullish. I'm not bearish either. I truly believe it's a hold, gold and silver. But this is one thing I found the other day, May 28th, 2024. This article: is it too late to invest in 1 ounce of gold? This is CBS News. 5 reasons to buy in now. To me, that's a red flag. If you look at 5 reasons to buy in now and has all the articles, is it too late to invest? It makes sense to be investing in 1 ounce guard. The economic landscape, persistently higher inflation. I did videos on why we're going to see lower inflation numbers. And, today, I just showed you early in this video, we're starting to see it. So, they don't know the fundamentals. They probably need to be listening to this channel, and they're not. So, but that's the other thing too, is that, sorry, there was a bug crawling on my computer. And so that was 1 ounce bars offer liquidity and probability. For all those who say mainstream hates gold and the bankers hate gold, yeah, CBS News. There you go. And the other thing too, let's exit out that. If you are like, oh my gosh, I must sell because the mainstream's always wrong. Gold is a bubble, resist its charms. This was in 2011. This article, I went and found that out. Now, granted, gold went up drastically in June, hit 1900, but they're not always wrong. The mainstream media was right in this case. So looking at all that. So yeah, if you look at it in terms of the PMI among others, let me see if I can get this back. I'll just stop sharing. Yeah, if you look at it, the economic data right now, if it's bad and inflation's low, in the short term, that might be bearish for gold or whatnot, but it's very bullish because the conversation will no longer be inflation. It's going to be recession, and they are going to drop zero rates to zero and start easing. And you want an example? We'll just go back to the bull market. 1970s was inflation, stagflation, very low rates, low easy money policy. They were raising rates, but inflation was going up much higher. So I don't expect too much. In real life we see stagflation, but I don't know if the markets really are going to acknowledge it. I think they're going to dress up the data so it doesn't look stagflation. So it's possible we see it in real life, but not in the markets. And in terms of the year 2000, the next 80s and 90s was a bear market for gold, high economic growth. Even though, we had slow inflation, we had high economic growth. In the 2000s, we had the crashing of the tech bubble, very poor economy. Alan Greenspan lowered interest rates to 0.5% or 1%. In fact, he could have lowered it just to 5%. I think it was 1%. And, that's draconian today. I think, and then he started slowly raising rates. And in 2008, there was the housing bubble that crashed. So basically, from 2000 to 2008, before the housing bubble, took gold from 200 to 600, 800, or even 1,000. But then it crashed, and gold, after the housing bubble, gold went from 800 to 17 or 1920. And what happened shortly after that? We had improving economic data. Despite interest rates staying the same, we had improving economic data, strong economic data. In 2013, that's when the economic data was so strong, the Fed started talking about tapering in February. And what happened? Crashed. That's when the gold crash began, and the bear market ended in 2015. And it really went sideways, and it didn't really do anything because they were pricing in a never a recession again. I remember Janet Yellen saying we'll never have a recession again. And then it slowly got, you know, mixed data, not all that great, but there was the Trump trade and the economy boomed. And then in 2019, that's when they started having problems. And they cut rates 3 times, and that's when gold started to move again. And then the COVID crash and rates went down to zero. They started QEing and it went back to 2000. But then what did they say? The inflation's transitory. And the economy, because everything opened up, started on paper, started looking improving. And now 2024, they started raising rates. There's a lag time, but you're starting to see, you saw it with Chicago PMI. I just showed you. The economic data is starting to get bad. The rate hikes are starting to show up in the data somewhat. And you're starting to see it in Starbucks, McDonald's, Cracker Barrel, many other things. The economy is worse. And so we're going to keep seeing as long as the Fed keeps rates, and in my last video, higher for longer. So, and you saw Chicago PMI today. So and then GDP was not great on Thursday. So that's all I have to say for this weekend. Let's see what it goes. And I showed you gold, the mainstream media, that is a red flag. But in the past, I remember, this is how long I've been in the markets. I still remember headlines from 2011. I still remember those. So anyway, if you watch this video, hit that like button, subscribe if you haven't, and I'll see you next video.